Ladies and gentlemen, I'm very glad to be here today to give some insights, as you correctly detected, on the non-life side, non-life perspective. I will give some insights on Munich Re's activities in these fields. Very important, I say insights. I guess I'm not the correct one to give an entire overview, as we have quite some initiatives in the meantime. Also, as it stands here, guess not the one to speak about reinsurers as such. My goal is to give an overview of what we in our product and venture building team for continental Europe do in Munich Re. As you said, fancy title, state-of-the-art innovation manager. Have not met anybody yet who understood what I'm doing. Whenever I struggle with that, I look at the title of our department, product and venture building, that covers it. On the one hand side, we build new insurance products, so we want to insure risks that are currently emerging. For example, cyber is a great example for that. So due to a change in lifestyle, in economy, in production, always new risks are emerging or not insured yet. So that's what we want to cover. On the other side, we want to increase the availability of insurance. Here, technical enrichment, technology enrichment of insurance products is a big topic. So for example, telematics in automotive, blockchain, we already heard these kind of topics. On the other side, we are venture builders, how we call ourselves. These are most of the times new insurance companies. As I say, they are currently popping up all over Europe. And on the other side, that might also be technically enabling companies. So introducing technologies newly developed or developed elsewhere, introduced into the space of insurance. How we do that and why we do that. But before that, maybe just an important message I want to share, and a learning that that reflectedly made a short time ago when at the reinsurance meeting in Monte Carlo, the new image movie of Munich Re was launched. It was quite fancy and modern by itself, which surprised me. Anyhow, we're giving our best to connect that to Munich Re, but still having a hard time with that. Nevertheless, that's not what shocked me. In a 3-minute infomercial about Munich Re, there did not once appear the word of reinsurance in it. What does that mean? Does that mean that our capacities that we built up as an industry over a long time and defended in various stages are not valued anymore? Very important. I don't think that is the case. It is rather that we still need to rely on risk and capital management and all the functions around that in the future, but there are some new hygiene factors arising which we need to adopt to be able to leverage these capacities, these USPs that we hardly built up over the past, to enable them in new value creation clusters into modern economy to be sustainable. And why do we think there's an urge for that? I'm pretty sure all of you know that slide. Major disruptions in different industries in the past. So taxi business no longer dominated by taxis. Major parts of hotel business lost to Airbnb, and so on and so on. Why did that happen? I think the origin for that is to be found in how labor is conducted nowadays. You don't need any longer a traditional concern, a well-orchestrated work labor to perform, to design products, to deliver products to the customer. It is rather that due to digitalization, due to internet, due to connectivity, it is very possible to work in a decentralized fashion. Means also very small entities can perform that task and in the end deliver product to the customer, which is no longer, and that is very important from my perspective, orientated on industries as we know them nowadays. So these boundaries between industries vanish, as also value creation is possible without focus on a certain industry. Just to give some numbers, a recent study of University of St. Gallen just published that only in 2017 about 3 billion in Europe were invested into these decentralized value creation clusters, and they are no longer orientated at the branches, they are orientated at customer value. So in the end, there's always a customer who has a specific need. Typical example, all of you know that certainly as well. Customer is not interested in buying a car, buying elsewhere insurance, buying elsewhere service for that car and getting it maintained elsewhere. He is interested in getting from A to B. And these new embedded providers emerge all over different industries, combining value creations from different industries, which makes them only suppliers and satisfy that customer need. We don't see that in insurance yet. So here also regulation and certain market entry hurdles such as capital requirements is some protection for us, but there will be a need to adjust from our perspective. In two ways. First of all, it would of course be great to be part of that value creation clusters in the future, because there are insurance risks in these customer value propositions. So if somebody is moving from A to B, there is a certain risk in that. It would be great for insurance to be represented in that value creation and to place insurance in there. But we are in a supplier role here, which gives us a hard time controlling the margins. Why it would even be more attractive to be at the forefront and owning some of these customer interfaces of future business. Meaning we enrich our products with services, with technology and other components to in the end no longer sell an insurance product, but to satisfy the need of a specific customer. And I'm entirely with Michael, that will not be the onlyest way we do business. There will be major insurance products which will be sold by people. So life insurance, there is a natural need. But for all these rather smaller or obligatory insurances, maybe like car insurance, there will be a different way of distribution. That's why we think there's an urgency for us to act as an industry and to adapt to these new challenges. In order to address these challenges, we, for our team in continental Europe, have identified 7 major challenges. Let me break them down to you into 2 categories. So for example, if you look at number 6, new business models. Digital business models. If I say that, I do not mean digitalizing existing business models. What I currently see most of the efforts in the industry running towards, meaning claims automatization, getting process faster, getting more cost efficient. That is also relevant, but that is to secure the existing business. What we want to aim at with our new business models and new ventures is future business models, is future portfolios that are not in the market yet or just slowly starting to raise. Of course, on the other side, if you look, for example, at number 3, automatization and cost reduction, of course, we also need to work on that. And of course, we also need to defend our existing business, because if these new digital insurance companies pop up in the market, they have an advantage in certain areas and they will also fight for our existing business. So to sum up, these challenges can be broken down in defending existing business by cost reduction and automatization, and by targeting a new business or future business which is currently strongly growing. Of course, we cannot do that by ourselves. So for example, number 7, cooperation with technology partners is important here. How do we address that, and what is Munich Re's strategy to address that? First of all, I'd say, in connection to the last slide, I like the idea of splitting, defending and gaining for new business. So on the one hand side, you need a strategy that is putting your current organization on state of the art while building new. Because if you wait for the existing business, for the existing infrastructure to meet current technology needs, probably never be there, as it just takes some time to adopt, and it was shown over the past to us that technologies in other industries tend to develop faster than in insurance. That's why we will always, and I'm not saying this is a bad thing, leak a little bit behind. This also gives us stability and quite a lot of advantages. So on the other side, try to invent while you are able, why the opportunities emerge in the market, and be ready as soon as your organization is there to reintegrate. When we were faced by the board with this challenge of implementing new business development and innovation about 4.5 years ago, to be honest, we were quite lost. It is such a wide field, and I'm sure many of you are currently facing that challenge as well. And there were some learnings we had to learn. Not saying that is a bad thing. Of course, we did some project I'm no longer proud of in that area, but nevertheless, that is also a cultural change that you need to go through, and we needed to go through, and we are still going through, of course. Nevertheless, we try to focus. So if you look at the attention that we as an innovation department allocate within the company, it's sort of like a curve. In the beginning, we have the early initiatives, we have the business units partnering with new companies, we have new technological trends, we maybe have new customers. We monitor that in a structured way and try to identify clusters within that. As soon as we see a certain relevance or a certain trend, we identify focus areas. Those are always ongoing, those are always exchanged. Meaning, a colleague of mine once said this great sentence, only fairy tales last forever, strategies must be flexible. Meaning those are currently changing. Even nowadays, that slide is not accurate anymore because one of these focus areas, namely IoT, was reintegrated as a new business area, as a new department in Munich Re, as we identified, yes, there is a relevance, and yes, there already is enough business to build a department within Munich Re. On the other side, we also kicked some of them out. We already heard blockchain. We do not believe that blockchain is not relevant. But we, for two reasons, to decide to not maintain blockchain in that area. On the one hand side, because we rather identified it to be an enabling technology than a game changer. On the other side, and I think that is true for all of them, timing is very relevant. So we think it might be necessary to wait in on the developments of blockchain in other industries to then implement when it is time for insurance industry. So these focus areas, if monitored for a while, two ways to go, either reintegration in the organization or on hold, reviewed after a while. Just quickly, a couple of words on those initiatives. IoT already mentioned, especially in the area of SME and industry, we see a lot of business potential by partnering together with other providers to create value offers towards the customer. As I said earlier, it is important to gain the customer access. It is important to not only be supplier to other industries and then they deliver to the market, but also to own some of these interfaces ourselves. IoT is a great thing, as we think there is a major risk component in it. That's why it makes sense for us to bundle these other supplies and then to deliver it to the customers, which are already, most of the cases, are our customers already. Other topic, for example, is digitally augmented underwriting. It used to be automated underwriting. We renamed that as we are not entirely there yet. And the goal here is not only to identify the correct price for tariffs, it is also about distribution, also about gathering information for existing tariffs to increase customer convenience. So there are a lot of examples here. Other big topic, of course, is cyber, and so on and so on. And big question, and that's also the name of the presentation, why is it important for us, for that reason, to partner with startups? We have different topics or different reasons why we think it is important to partner with startups on that. First of all, the most important in my perception, client needs. As we heard earlier, we are in a regulated environment. We have huge responsibilities and we need to ensure continuity in our business. That's why it is very hard for us to test and to learn about the customers and to quickly verify ideas. That's a great chance for startups. We have these isolated entities, limited risk, limited reputational risk also for the insurers. So we can build up ideas, we can test in the market and either follow up on ideas or not. So just to give an example, I personally never believed in peer-to-peer insurance, selling peer-to-peer. I want to drink beer with my friends, I don't want to sell them insurance. That's why I not believed in that personally. Nevertheless, we set up some testing environments, we partnered with some startups, gained feedback, saw the numbers that there is a market, maybe a limited market, but there is a market for that, and that's why we pursued that idea. If we would have done that on company level, maybe with Ergo or another primary insurer, it would have been much harder to test, and you cannot just decide to not pursue that idea the next day. So that's why customer insights, especially as a reinsurers, this is a great feedback loop for us, partnering with startups. Secondly, of course, we want to do business with that. Focus is on future business. We assume that the big accounts in the future will come from that area. We saw the slides with the change. Oh, thank you. I'll try to hurry up. We will see also in the, I think it was the Stocks 500 or something that we looked at, that there was a huge change in the companies that are in that. We think the same will happen for insurance portfolios. Already nowadays, only the annex insurance that we see, for example, in Amazon, are major portfolios that will strongly increase, and now it is time to secure that portfolios. But also now it is possible to make relevant business with these startups. Technology leadership. You might laugh and say it is not hard to be technological leader in insurance, as there is not too much technology in insurance yet. Don't entirely agree, but yes, there is room for improvement. But there will be, as we see basically in all lines of business, enrichment of insurance products by technology. So there will be key technologies. Just to name one, sensor technique. To predict and also to prevent risk. So for example, Munich Re bought a startup called Relier to gain that knowledge inside Munich Re to secure it for the future. So that is an area why we partner with startups, as we believe these key ideas, these key technologies will come from new companies and not so much from existing ones. Last but not least, when I started in insurance about 10 years ago, I was really surprised that there's no R&D development. There is, in the history of Munich Re, over 100 years, never been a research and development department. I think that is true for most insurance companies that we look at. About a couple of years ago, there were also no proper marketing departments. We adapted to that. We adapted to the market and have proper marketing departments now. I think the same is true for research and development as new components arise and as our products change. We managed, from my perspective, as an industry, a great challenge here. We did not implement them on company level, but as we just heard, on industry level with so-called insurtech hubs or similar concepts, where we as an industry managed to merge together to build the infrastructure to research and develop, to prototype, and afterwards integrate into the companies what we might make use of. So from an industry perspective, a great achievement. In the retro perspective, not building that up individually. Of course, that's also happening, but major part is outsourced R&D into the startups, into these value creation systems, insurtech hubs, and so on. That's why we think it is important for us to open us towards that startups. Not only new insurance company, also technical providers and brokers. Thank you very much.
Thank you very much. I have just one remark and one question. On strategy, the sentence you said, I like that in a CV I read once. I don't know how to do much, therefore I'm responsible for strategy. So it's also a lot of words, a little contents. And the second, I have a question, because you're not in any discussion board later on. You had the analogy, Uber doesn't own a taxi and Airbnb doesn't own a hotel room. But they're using, or some people say misusing, private people having cars or private people having apartments as the actual, let's say, thing they're giving to the customer. So they're just organizers. What would be the analogy in insurance? Where would the Uber be? I understand that, organizing it could be a reinsurer, but who would be the one who supplies the car or the bed?
Yep, very good question. The question is about the customer ownership. Why is this disruption I described so important for these industries? Because they no longer own the customer, and because they are just getting suppliers. For example, Uber is the technology owning the customer interface, and the cab drivers just the supplies in the background. And I think that is also the risk that we as an insurance industry are facing, that we will be the suppliers of risk capacity, of risk know-how, but no longer be able to control the margin. So an example, BMW, coming from Munich, big employer in Munich, even though I'd say 90% of the car is produced outside with suppliers around Munich, and there are hardly any jobs with BMW, and there's not so much value creation in it. If you look from a production perspective, anybody anyhow wants to work for BMW. Why is that? Because they own the customer, they create the margin and can suppress the supplies in the background. And that is a risk that we are facing if we no longer own the customer. And that, I think, is the analogy.